Hello and what is going on, lovely people of the internet? It is Hoop Money here with another video for you guys today. Today we are going to be going over contextlogic or Wish stock and why exactly it crashed so hard. They just released their earnings report and this was completely the catalyst for why this thing is down 20% today. And honestly, I went through their earnings and I looked at their new financial statements, and there's a few things that aren't too pretty, so we're gonna have to go over those later in the video. But first, before we get into all that, if you guys have any cryptocurrency and you want to earn some passive income on it, you can use the links below in the description to sign up for BlockFi. They're also doing a promotion where you get up to $250 of free Bitcoin. So again, free money for just joining that, especially if you already have cryptocurrency. Also, if you'd like to sign up for public.com, it's an amazing stock brokerage. You get up to $70 in free stock just for signing up and depositing at least $1. So check that out as well. Links in the description or in the pinned comment section. And also sign up for my Discord. That link is below. Anyways, guys, let's get right into the video. Alright guys, so first things first, I wanted to just show you guys what the analysts have to say about this. There was a bunch of new targets that were posted today on August 13th, so let's just go over all of them. We got 5 new analyst downgrades from Bank of America, Cohen, JP Morgan, Oppenheimer, and William Blair, and then 3 reiterated. We've got a $12 target from Bank of America, $6 target also from Bank of America, $10 target from Cohen, $5 target from JP Morgan. That one was really bad. It went from $17 to $5. $19 target from Credit Suisse, $15 from Loop Capital, and $8 from Stifel. So needless to say, they did not beat on earnings. Their financials did not look good at all. We're going to go over that right after. But first, let's just take a look at the price of contextlogic. So as you guys can see, it's sitting at about $7.53 today, and I actually picked up a call option around 10 a.m. and it's up about 12% on the day. We'll see where that one goes. Like I said, they did miss on earnings, so it could possibly fall more, but just seeing how much of a dump off, I mean, it was down 20%. I think there will be at least a small rebound, so that's why I picked that one up. We'll see what happens. Then we have this headline right here: contextlogic stock plummets on earnings miss and rare double downgrades. So we'll go over the key features from this article. So the company posted a loss of $111 million or 18 cents a share. And then revenue also dropped to $656 million from $701 million. Analysts were expecting revenue to be about $723 million. So with revenue being at $656 million this quarter, that's a big miss on revenue. Even the low estimate was $714 million. So by them posting $656 million as their revenue, they really did miss on this figure. They stated that these poor results were from a drop-off in activity on the company's mobile e-commerce platform that connects shopper and merchants. Investors and analysts actually expected that to increase with the easing of the pandemic and return to more normal consumer shopping activity. This JP Morgan analyst took it a step forward, double downgrading contextlogic to underweight from overweight and cutting its price target by whopping 70%. This is what I was telling you guys, to $5 a share from $17 per share. So just from this article alone, you can see that things aren't looking too pretty for Wish. Taking a deeper dive at their earnings, you guys can see that their revenue $656 million. Now in 2020, the same quarter, 3 months ended June 30th, they posted $701 million. So if you expect this company to be a growing company, it should be growing its revenue from the same quarter in a prior year. Well, in the case of Wish, they're actually losing out on revenue from the same quarter of last year, which is just not really what you want to see as an investor. Some hope for their revenue numbers is that 6 months ended June 30th. So if we take the entire first half of the year of 2021 and 2020, they've actually grown their revenue from $1.1 billion to about $1.4 billion. And it also appears that they're now investing less into sales and marketing, with their 2020 figure being $444 million and now this figure being $396 million. On top of this, if we do look at cash and cash equivalents on their balance sheet, as of December 31st, 2020, they were at about $2 billion of cash. And as of June 30th, 2021, they're now at about $1.4 billion in cash. So their cash position has decreased as well. Their total assets also went down from $2.4 billion to about $1.75 billion. Now with this, their total liabilities also went down from $1.37 billion to about $889 million. But when it's all said and done, total stockholders' equity went from about $1 billion to $826 million. And here we have a message from the company. Wish has begun executing on initiatives designed to enhance the user experience and increase engagement on the Wish app following second quarter results that did not meet their expectations. Their goal is to ensure that users love coming to Wish often for an entertaining shopping experience where they can find unique products at affordable prices. They expect their focus on enhancing product quality and selection, providing an unmatched fun and entertaining shopping experience, and also improving the performance of the app. That will drive new user growth, retention, and profitability over the long term. They are working hard to improve their performance and are confident that Wish will emerge as a stronger business. So while it is true that they absolutely got wrecked on earnings and they did not post good financial results at all, I want to take a look at the current share price and what's been going on with this stock since it IPO'd, because this might tell you a different story. As you guys can see, it IPO'd over here around $20 per share, and it pushed all the way up to almost $33 per share in February. Now, ever since February, it's been going down, and it's basically only been going down besides for this one push right here in retail trading. They bought the dip, but ever since then, it's also just been going down. It got that little double top pattern. It couldn't break out of that resistance point, and it's been selling off. We hit a low of $6.69 today. And even though they did post very poor financial results, the stock price has dropped over 50%, around 60%. Of what the IPO price was. So it really begs the question, how much of these financial results were already priced in to the share price before earnings was announced? From the current share price, it's very hard to imagine that it can drop much lower than what we're seeing right now. And as you guys can see, the market tells its own story. There was a huge influx of volume today with buying that dip, a nice green candle on today's date. If we look at this hourly chart, again, right as market opened, people were buying up that dip and the price held. So I do think that this was too much of a drop and that this was not justified, as the share price has already been beaten up like crazy since IPO. And even though we got mostly downgrades from analysts, the price targets are still well above the current share price. $13, $12, $10, $19, $15, and $8. So it's definitely not all bad news. I do believe that a lot of this was already priced in. The stock price has absolutely plummeted since it IPO'd, and I think these earnings were a representation of what the stock has already been doing over the past year. So I'm not going to tell you guys to just blindly buy into this stock because it dipped so much, because they did post very poor financial results. But in the end of the day, I don't know how much further that this drop could really go, considering that they are expected to increase their revenue in future quarters, and that just raises the certain risk that if they continue to miss on these revenue targets, then the stock price will definitely not perform as well as you would hope. So at the end of the day, I think the current information that we have about Wish is definitely priced in, and we're gonna have to rely on the future and what the future projections are and whether or not we beat those future projections in order for this stock to really start to climb. Anyways, guys, that's about it for the video. I hope you guys have enjoyed. I hope you guys learned something today. Learned something maybe about quarterly financial results. I love talking about this stuff. Earnings season is fun. And yeah, guys, with all that being said, I hope you guys can leave me that like on the video. Subscribe for more content. Turn on post notifications so you don't miss a beat. And with that being said, that's about it. See you guys later. Peace.